Palantir stock news. Is PLTR stock worth $5 or $18? PLTR stock price targets and PLTR stock analysis. In today's episode, we'll dive into 3 key articles that provide different perspectives on Palantir stock price and future prospects. Today, will be based on 3 articles. The first one is No, Palantir stock is not done moving higher. This article argues that Palantir stock still has room to grow despite its recent gains. It highlights the company's strong business demand, impressive growth, and profitability. We'll examine the factors that support this bullish view and consider whether Palantir stock has the potential to continue its upward trajectory. The second one would be Wall Street analysts think Palantir is due for a 41% drop. Are they right? This article presents a contrasting opinion as it discusses Wall Street analysts' bearish outlook on Palantir. These analysts have set a price target indicating a 41% drop from the current stock price. We'll explore the reasons behind their skepticism and evaluate whether their concerns are valid. In the third article entitled, Palantir has a head start in the AI race, buy on recent strength, rating upgrade. In this article, we'll discover why Palantir is considered to have an advantage in the AI race. We'll delve into Palantir's early release of its artificial intelligence platform, or AIP, and its potential to drive further growth. Additionally, we'll analyze the recent rating upgrade and what it means for investors. Now that we've introduced these articles, it's time to analyze and synthesize the different perspectives. We'll explore the key arguments, examine the underlying data, and provide our own insights on whether Palantir stock is worth $5 or $18. So make sure to subscribe to our channel and hit that notification bell. No, Palantir stock is not done moving higher. The first article dives into the positive momentum of Palantir Technologies, or PLTR, and addresses some of the skepticism surrounding its recent rise in stock value. Now, Palantir went through a rough patch during the 2022 bear market, but things have been looking up lately. Investors have been increasingly drawn to the company due to its improving performance and its ability to leverage AI for its clients. In fact, the stock has risen by an impressive 135% from its 52-week low. That's quite a jump. But with such a rapid increase in stock value, some analysts and investors have started to question if Palantir has moved too far, too fast. However, the article suggests that the recent downgrade might actually present a buying opportunity rather than a reason to sell. It points to Palantir's positive trajectory as a strong reason to remain optimistic. Of course, there are concerns raised by analysts at Raymond James Financial. They mention challenges in finding catalysts and the higher valuation as reasons for their downgrade. However, the author of the article argues that the rise in stock value is real and that valuations have been increasing in recent months. For example, the price to sales, or P/S ratio, has risen from 7 to 15 since the beginning of the year. That's quite a significant jump. Another interesting point the article highlights is Palantir's history of investors being willing to pay a higher multiple. In 2021, its sales multiple rarely fell below 24 and even reached a record high of 46 that year. This indicates a favorable environment for investors to value the company higher. But that's not all. One significant factor working in Palantir's favor is its transition to profitability. Unlike last year when it reported losses, Palantir is now a profitable company. In the first quarter of 2023, it recorded a net income of $17 million and expects positive GAAP net income in every quarter this year. That's certainly a positive sign, especially when compared to other emerging growth tech stocks still facing losses. Now, let's talk about Palantir's AI capabilities. The article emphasizes that Palantir has become a leader in leveraging AI for its platforms. They recently launched the Artificial Intelligence Platform, or AIP, which enhances their AI capabilities and provides valuable insights for their clients. This gives them a competitive advantage over other big data companies. Considering Palantir's capabilities, revenue growth, profitability, and the increasing recognition of its AI prowess, the article suggests that the stock is likely to continue rising. Of course, some investors might worry about slowing growth due to increased valuation, but the unique value proposition of Palantir and its AI capabilities are expected to attract more investors as the company further improves its AI capabilities and profitability. It's certainly an exciting time for the company with its positive momentum, improving financials, profitability, and AI capabilities. Wall Street analysts think Palantir is due for a 41% drop. Are they right? Now, there are 12 Wall Street analysts who have shared their thoughts on Palantir stock. They have a median price target of $8.25, which suggests a potential 41% drop from its current levels. Now, this raises the question, are these analysts' predictions accurate? Palantir is a company that has caught the attention of investors thanks to its innovative use of artificial intelligence or AI in its products. Their AI-based solutions allow users to input data and receive valuable insights. Palantir has already deployed its products across various governments and commercial applications, which has contributed to its stock experiencing a significant increase of around 125% year to date. The article argues that the stock's rise was actually expected, considering the low valuation it had at the beginning of the year when Palantir released its Q1 earnings report, which showed impressive growth and increased earning guidance. Investors got excited and the stock rallied. However, some Wall Street analysts haven't updated their price targets since then, leading to slightly outdated estimates. But here's the thing, not all rating agencies agree. Firms like Goldman Sachs, Citigroup, and Credit Suisse have updated their price targets, but they still project values below Palantir's current trading price. It's important to note that the price targets are opinions and can vary among analysts. On the other hand, firms like Raymond James and Bank of America have higher price targets of $18 for the stock. The article stresses the significance of taking a long-term perspective when considering Palantir stock. It highlights revenue growth as positive factors. Yes, the stock's valuation may seem high at 16 times sales, but the article suggests thinking of it as a small position within an investment portfolio. Ultimately, the article suggests that despite the differing opinions of Wall Street analysts, Palantir's potential as a go-to solution for decision-focused AI assisting software makes it an intriguing investment. It's crucial for investors to focus on the long term and consider the company's prospects for providing shareholders returns over time. Palantir has had a start in the AI race. Buy on recent strength. Rating upgrade. The third article highlights Palantir's strong position in the AI race and actually recommends buying the stock based on recent strength and positive developments. You see, the enthusiasms for AI has been driving the rebound in tech stocks, but Palantir stands out because it has been built on big data and machine learning software for years. It's not just following the trend, it's been a pioneer in this space. One of the key things that caught my attention is Palantir's new artificial intelligence platform, or AIP for short. They've recently released it to select customers in both the public and private sectors. This platform allows customers to leverage the power of AI on their own databases and automate their business processes. The article emphasizes the enormous potential of Palantir's AI capabilities and how it can be applied across various sectors. That's pretty exciting. Now, let's talk about the bullish case for Palantir. Despite the challenging macro environment, the company has shown strong execution. They have achieved high revenue growth at scale and have gained significant go-to-market momentum. What's more, they have a presence in both the public and private sectors, which diversifies the revenue streams. And here's the cherry on top. Palantir has positive free cash flow and is already GAAP profitable. That's impressive. I won't deny that Palantir's recent rally has made its valuation a bit expensive. However, the article suggests that there is still potential for further upside. They provide some valuation multiples based on Palantir's revenue guidance for the current fiscal year and Wall Street's consensus expectations for FY24. It's interesting to see how the company's Q1 earnings performance exceeded expectations and showcased strong momentum in the commercial and private sectors. All these factors contribute to the bullish case for Palantir. In fact, the article concludes with a strong recommendation to buy Palantir based on its positive momentum, the potential tailwinds from the AI platform, and the expectation of re-acceleration in growth in FY24. The author even sets a price target of $17 by December 2023, which suggests further upside from the current levels. Synthesizing these articles, we find a range of perspectives on Palantir stock. While some analysts believe it has room to grow, others express skepticism and predict a potential drop. However, there are positive factors supporting the bullish case, including Palantir's profitability, AI capabilities, and positive momentum. Investors are really advised to consider the company's long-term prospects and evaluate their investment strategy accordingly. We hope this analysis have provided you with valuable insights into Palantir stock. Remember to subscribe to our channel and hit that notification bell to stay updated on future investment discussions. Thanks for joining us today, and we'll see you in the next video.